It's 7:03 in the morning in Oslo. Some guy's sitting at his desk with a coffee he hasn't even touched yet, and he clicks one button. That's it. No alarm goes off. No headline runs. Nobody calls a press conference. Not one news channel even mentions it. But somewhere in London, a water utility just changed hands. Over in Germany, a stretch of highway now answers to somebody new. And a little sliver of apple, yeah, the same apple sitting in your pocket right now, just got a new owner. Nobody in London knows. Nobody in Berlin knows. Nobody in Cupertino has a clue. And honestly, that's the whole point. That's exactly how this thing's built to work. Here's what should bug you about this. Norway's got 5.5 million people. That's less than the population of Los Angeles. And somehow this one small country controls more wealth per person than almost anywhere else on Earth. You didn't vote on any of this. Nobody asked you. Nobody asked anyone. So here's the number that makes the whole thing click. Sovereign wealth funds around the world are sitting on close to $30 trillion. 30 trillion. That's more than the entire economies of the US and China put together. Not close either, a lot more. By the time this video's done, you're gonna know exactly who owns that money. You'll know what they're buying with it right now, today, while you're sitting here watching. And you'll get why your rent, your retirement account, and even your country's independence are already wrapped up in decisions you never got a say in and probably never will. Act 1, what a sovereign wealth fund actually is. So what actually is a sovereign wealth fund? Strip away all the jargon and it's honestly pretty simple. Think of it as a country's investment account. A government takes its extra money, oil profits, trade surpluses, foreign currency just sitting around, and instead of letting it collect dust in a vault, it invests that money all over the world. Stocks, real estate, infrastructure, private companies, all of it. And the first one didn't even come out of some big financial capital. It came from Kuwait, back in 1953, funded by oil money. Nobody really thought twice about at the time. It was small, it was quiet. Almost nobody outside the region paid it any attention. Nobody had a clue where this idea would end up going. Now compare that to Norway. Their fund kicked off in 1990, built off a single oil deposit in the North Sea. Today, that fund owns more than 1.5% of basically every publicly listed company on Earth. Every single one. Apple, Nestle, Samsung, all of it, they've got a slice.
Norway's sovereign wealth fund has become one of the largest single investors around the world.
And Norway's just one player in this. Saudi Arabia's public investment fund plays a totally different game, funding stuff like NEOM and Live Golf, buying influence and image just as much as returns. China runs its state funds almost like an arm of national strategy, locking down infrastructure and tech footholds all over the world. Singapore's Temasek and GIC do the exact opposite of Saudi Arabia. Quiet, disciplined, no headlines, just decades of patient compounding in the background.
Singapore Sovereign Wealth Fund GIC has acquired a 10% stake in container terminal operator Terminal Investment.
Here's what $30 trillion actually means, in plain English. That's enough to buy every single share of Apple, Microsoft, Google, Amazon, and Nvidia combined and still have money left to do it again. Several times over, actually. And honestly, this is the whole story right here. These funds don't act like your typical investor chasing next quarter's earnings report. They're playing a longer game, a quieter game, measured in decades instead of quarters. And that difference in patience is exactly why they've become so hard to compete with. Act 2, the buying spree. Real assets in real places. Now let's take that same pattern and push it forward. We've been talking about stock tickers and index shares this whole time, numbers on a screen. But these funds don't stop at paper ownership. They move into stuff you can actually touch, walk through, drive on, drink from. Start with infrastructure. Gulf funds and Asian sovereign funds have spent the last decade buying up stakes in European airports, toll roads, and water utilities. So a fund based in Abu Dhabi or Singapore now collects a little fee every time a truck rolls down a German highway, or a plane lands at an Italian airport, or a family in England turns on their tap. That fee used to stay inside the country. Now it flies out every quarter to a sovereign account thousands of miles away. Real estate tells basically the same story, just with addresses instead of asphalt. Qatar's fund owns Harrods. It owns a huge chunk of the Shard, the tallest building in London.
Qatar is now entering the American sports market by buying stakes in two Washington-based franchisees.
Norway's fund, that same one we talked about with the North Sea oil money, holds office towers and apartment blocks across Paris, New York, and Boston. And this isn't some hedge fund flipping a building in 18 months for a quick profit. This is permanent ownership held for decades. The kind of ownership that outlasts election cycles and outlasts the politicians who complain about it. Then you've got corporate stakes, and this is where it gets more interesting than just collecting rent. Saudi Arabia's PIF holds major positions in Uber, in Lucid Motors, in video game publishers with hundreds of millions of players. And these aren't passive bets just sitting quietly in a portfolio somewhere. Stakes like these come with board seats. They come with real influence over strategy. So the fund isn't just betting on the company's success anymore, it's actually helping steer it. Now put all three of those together: airports, apartment towers, and boardrooms, and you start seeing a pattern that's worth calling out directly. Ports, pipelines, power grids. One by one, the choke points that keep a modern economy running are ending up owned by entities that answer to a foreign government, not to local shareholders, not to voters. A city council can't vote out a shareholder sitting in Riyadh. A parliament can't subpoena a fund manager in Beijing. And here's the part most people never even see. Sovereign funds don't wait in line for these deals like a regular investor would. They get first access ahead of the public, ahead of most private investors too, because of relationships they've already built with investment banks and governments. So the same banker who arranges a Gulf states bond sale this year is the one who calls that fund next year with a private tip on an airport stake before it ever hits the open market. It's basically a financial revolving door, and regular investors, the ones with a brokerage app and a 401k, never even know the door exists. So when a foreign government ends up owning your water utility or the airport you fly out of every year, sure, the profit motive is still sitting right there, exactly where you'd expect it. Nobody's hiding that part. But there's a second motive sitting right behind it, quieter, harder to spot on any balance sheet. That motive is leverage. And leverage, once it's in place, doesn't even need to get used to matter. It just needs to be there. Act 3. Why this changes the rules of ownership and power. So step back from all the buildings and boardrooms for a second, because the real question here isn't about returns at all. It's about control. Who owns the infrastructure? A country actually needs to keep running if a crisis hits, if a conflict breaks out, if supply chains suddenly freeze up. And that's the question governments are only just now starting to ask out loud. And some of them already have an answer they don't like. The US and the UK have both tightened their foreign investment review rules over the last few years, specifically to slow down sovereign fund purchases in sensitive sectors. Ports, semiconductors, energy grids. Because nobody in Washington or London wants to explain to voters why some foreign government has a say in who keeps the lights on. So here's where that paradox from the start of this video actually gets resolved. Norway's got 5.5 million people. Qatar's got under 3 million. Singapore's got under 6 million. None of them can field an army that worries the Pentagon. But through spreadsheets and stock certificates, these small countries now shape economic decisions inside nations 10, 20 times their size. Not with tanks, with ownership stakes that take decades to build and even longer to unwind. And here's the part that hits closest to home. Your index fund and your pension fund already sit right next to sovereign money, in the exact same companies, on the exact same shareholder registries. Which means your 401k, the one you check every few months hoping it's going up, has its performance tangled up with decisions made by governments you never voted for and never will. Now look at where this money's headed next. China and the Gulf states aren't just buying stakes in Western companies anymore. They're using sovereign fund capital to build alternative payment systems, and infrastructure networks, ones that root around the US dollar, around Western banks, around the institutions that have run global finance since the end of World War II. That's the quiet infrastructure sitting behind every BRICS headline you've seen. $30 trillion. Say it again, because that number doesn't get any smaller the second time around. 30 trillion. Moving across borders with almost no public oversight. No election decided this, no parliament debated it. No voter signed off on any of it. This is the new architecture of global power. It doesn't look like soldiers crossing a border or a flag going up over some Capitol building. It looks like an ownership stake, filed quietly, held for 30 years, and never once put to a vote. The world isn't being conquered anymore. It's being bought one shareholder vote and one land deal at a time. And most of us are just tenants who don't even know who holds the deed. If this helped you see who's actually pulling the strings behind the headlines, go ahead and subscribe and send it to someone who still thinks borders are where power actually lives.